What's up everybody? Welcome to the Stocks channel. My name is Corey and today we had a very interesting day in the stock market and there was a lot going on beneath the surface. I definitely suggest watching the entire episode because there's going to be a lot of information that will help you navigate this market. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we can clearly see SPY was relatively flat on the day, only closing down 0.03%, but there was a lot that went on beneath the surface and SPY is definitely going to benefit from this. So the first thing you can see is that we did break out an intraday, we did see a brand new all-time high. That alone is bullish price action no matter how you spin it, but we did not close back above 478. So the bullish price action close will be above 478 and we're definitely starting to see the bulls trying to break through that level. We clearly were above that level intraday, but we did not close above that level, so we really need to see the bulls flexing that muscle and closing above that critical resistance. If we can't break above 478 in the next couple of days, we could actually see a flush from this level and come back down to the breakout level right around 472. However, I can tell you intraday price action and looking at lower time frames, we are starting to break out of this bull flag. So this is bullish price action. Even though it's not easy to see on the daily chart, you have to hammer down into smaller time frames to see the bullish price action. Now, if you pay attention and you watch the entire episode, you're going to learn a lot about this market, and it's not easily noticeable if you don't look at the market as a whole. So on SPY, you need to see that breakout above 478, and you will be looking for those price targets at 481 and 483, and above 483, we're very likely getting into the 490s, and that will be the next critical resistance. We clearly have a very strong bull trend. Price action is above all the moving averages. All of our moving averages are very positively stacked to the bull side and all positively sloping, and we are well above critical support levels in the S&P 500. So this is still by far a very bullish trend, and price action is also looking very bullish. So I do expect to see those brand new all-time high price targets. We won't know for sure until we start breaking out above 478, so continue to watch the price action. If we break down below that critical support at 472, you're looking for the next critical support at 470, and we need to stay above 470 to hold on to this bull trend. So watch those critical support levels, and as long as we're above them, you need to stay bullish. On the NASDAQ 100 triple Qs, we had a lot more volatility, and we see the triple Qs closing down 1.3% and finding support right above that positively sloping 20 simple moving average, which is exactly what you expect to see in a strong bull market. You could see the triple Qs still do have the bull trend, but the price action is definitely testing critical support right around 395. If we start breaking below 395, your next critical support level will be down here at 391, and we will need to stay above 391 on the triple Qs to hold on to the hopes of a bull trend. If we lose the bull trend, we're going to know it because we'll see the price action breaking down, we'll see the moving averages lose the bullish stack up, and then we'll start getting a lot more defensive. But right now, this could be a great opportunity to buy the dip in a bull market right off of this 20 simple moving average, and I still do think the triple Qs will see a brand new all-time high and they're just lagging behind. Pay attention to the volume, and if we start to see a continuation of high volume selling, instantly get a lot more defensive, especially if we start breaking below 391. However, this is still a bull trend and we're still above critical support, so there's no objective reason to say that we're not just testing support and about to bounce off of this level and continue to go higher. The bullish breakouts will be back above $400, and then that bullish breakout back above 403 to 404. Above 404, we are very likely going to see a very quick trip to new all-time highs with price targets up here at 410 and 415. So watch those critical support levels, and as long as we're above them, you will want to buy the dip and you will want to stay bullish. Jumping over to the Dow Jones, you can see the Dow Jones closed at yet again another brand new all-time high, and it was up 0.6% today, and it formed a brand new all-time high on a gap up and run. So by far, if you're looking at the stock market as a whole, you can see that the tech sector is selling off in favor of the Dow Jones stocks like the financials and industrials. There is no way, in my opinion, that you can look at a brand new all-time high in the S&P 500 and the Dow Jones and start getting bearish on the stock market as a whole. There's very clear evidence that money is not leaving the stock market, it's strictly just rotating around, and that's exactly what you would expect to see in the first month of the year. A lot of big money is moving around and positioning for a brand new year, and we're going to see exactly which sectors that they want to favor, and right now we're definitely seeing a lot of money flowing into the Dow Jones. We're going to brand new all-time highs on increasing volume for 2 days in a row, and you can very clearly see this is a very strong bull trend with all of the moving averages very positively sloped. So you need to stay bullish as long as we're forming new all-time highs across the board, and it's more than likely the tech sector is just seeing selling because it was so strong last year. You're seeing money managers selling their winners and starting to buy the next sectors they think are going to be the next winners. So if you're looking at the Dow Jones, you can clearly see we hit our price target at 368, and above that we still do have that price target at 372, and it does look very likely like we're going to get to that 372 price target. Watch downside support at the gap fill at 366, and we still have strong support at 365 and the breakout level at 361, and our 20 simple moving average is right around 360. So the bulls are in full control, and you can clearly see the Dow Jones wants to continue to go higher. Jumping over to the Russell 2000, you can see we were down 0.15% today, and we're still finding resistance exactly where you would expect to see it, around 226.7. The full gap close will be on a breakout above that level, right above 228. And if we can close that gap and continue to trend higher, you're looking for very strong resistance at 231. If we can break back above 231, we'll instantly start looking a lot more bullish, especially if we get that bullish breakout back above 234. We'll be expecting to see a brand new all-time high in the very near future. So right now, respect the resistance level, but understand the price action is just cooling down after a very monster move, and we're back above the 50 EMA and all of the other moving averages for that matter for the second day in a row. So the price action is definitely bullish, and the next bullish breakout will be above about 226.7. We're starting to develop a bull trend, but we can't count our chickens before they hatch. We need to see the official crossover. As long as IWM is staying above about 223.5, you can stay bullish, with the next critical support level down here at 220 and the breakout level right around 218.5. So don't get overly bullish until we get the bull trend, but it's definitely looking like the Russell 2000 wants to close that gap above, but we won't know for sure until we get the breakout above resistance. Jumping over to the ARKK ETF, you can see that Cathie Wood's ETFs did not get the Santa Claus rally, which is officially ending with today. So the price action did test that critical support at $90 yet again, and so far we can definitely see a bounce off of that level. However, if price action breaks below 90, that's going to be a very bearish breakdown, which means ARKK is more than likely heading down to 85 or 81. So on a breakdown below 90, you can get a lot more bearish, but I wouldn't be getting bearish at support. So as long as ARKK is above 90, there's still the possibility this is a double bottom, and we're coming back up to break the neckline at 99 and starting higher towards about 107 to 109. The next bullish breakout will be above 99 and then 103 or about 104, and then we could start seeing higher highs and higher lows in this ETF. However, you have to respect the fact that ARKK is definitely in a bear market, so don't be getting bullish until the price action can at least break back above 99, or you can at least try to set up a good risk reward ratio right off of the support level at $90, knowing that you need to get out on a break below 90. So look for resistance right around 95 to 99 and downside support at 90, and if we break below that, we're more than likely going to 85 and 81. On the VIX, we were up 1.81% today, and we still see the VIX trading well below 18 and definitely well below 20. Remember, the VIX could find support right around 16, and we could see another spike of volatility, or we could break through 16 and find the volatility once we get to support at 15. Remember, you need to stay bullish as long as the VIX is below 20, and if the VIX starts getting above 20, just get a lot more cautious because we could be seeing another volatile sell-off. But right now, the VIX is telling us to stay bullish and expect higher prices. On Bitcoin, we're currently trading back down here at this very critical support level at 46,000, so we're definitely seeing this support level tested numerous times. As I've told you many times before, you can get bullish off of this support level, but if we lose this support level, get ready to see Bitcoin trading down around 40,000, and below 40,000, we could be going all the way back down to 30,000. However, if we can see Bitcoin bouncing off 46,000 and we can start to see some high volume buying, that will be bullish, and the next bullish breakout will be price action above 51,000 and then breaking back out above 53,000. We need to see that bullish price action breakout to get bullish because right now we still have a bear trend. So don't be getting overly bullish on Bitcoin if it breaks down below the support level at 46,000. On Amazon stock, we were down 1.69% today, and you can clearly see why I've been telling you to be cautious on this stock. It has a bear trend, so you can't get bullish until we break out above resistance, and you can see today we clearly got rejected at resistance and we closed back down below support. So right now the next support levels to pay attention to are 33.11, 32.44, and 31.85. It's very likely if we lose this support at 33.11 that we're coming all the way back down to 31.85, so watch that as the most critical support. The critical resistance to break above will be right around 34.30, and then above that we'll need to break out above about 34.65 and 35.24. Don't get bullish on something in a full bear trend. Continue to watch support and look for opportunities to buy the dip and scalp off of these support levels, or short at resistance and cover at support. On Tesla stock, we were down just over 4% today, which is definitely not surprising after that monster bullish day we had yesterday. We still have this gap below that won't fill until we get back down to about 1085, so look for that as a potential gap fill support if we do start to trend lower. But right now you can see intraday we did find support off the 5 EMA, price action still above all the moving averages, and we still have a very strong bull trend. You can see we did close that gap above at 1208 and instantly found resistance, which is not to be surprising because I told you to look for that. If we can break out above 1208, your next resistance is at 1240, and on a break above 1240, you're looking for brand new all-time highs with price targets in the 1400s. If at any point we lose this critical support level breakout level at 1080, be a lot more cautious because we could be coming back down to $1,020 or $1,000. Those are strong support levels that if we do lose those levels, you're looking for the gap close below right around $940. On Apple stock, we were down 1.27% today, which is definitely not that big of a deal because you could see the price action still above all the moving averages and we still have the bull trend. It still looks likely like we could bounce off the support level at 179 and start trending higher to my price target at 188. Remember, there's no guarantee that we have to get to 188, but as long as we have the strong bull trend and we're sitting above critical support, which is down here at 176, it's very likely we are going to hit that price target. So I'm bullish on the price target at 188 as long as we're above 176. And if we break below 176, you want to look for support down here right around 170. So stay bullish on Apple as long as it's above 176 and continue to respect this very strong bull trend. Jumping over to the financial sector, this is definitely one of the most important elements that you need to take away from tonight's episode. You can clearly see the financial sector is looking very bullish, going up 2.63% today and gapping up above the previous gap and closing near the high of the day, near resistance from the previous daily highs. You can see we're very close to regaining a full bull trend, and this is definitely very bullish price action. So from here, the financial sector looks like it's going back into a bull market, and there's no way you should be getting bearish on the S&P 500 or the rest of the stock market when the financial sector is starting to show some strength. You can clearly see we're going up on increasing volume, and this is a very bullish impulsive price action day, so don't ignore the fact that the financial sector is looking very bullish. Jumping over to the industrials, you can see a very similar sign as the financials, with the industrials going up over 2% today with very bullish price action and a very strong bull trend, and it looks like the industrials are getting ready to form a new high. Don't be getting bearish on the stock market when the financials and the industrials are looking very bullish, because a weak tech sector is not enough to send the SPY lower if we're getting a strong financial and industrial sector. Jumping over to the healthcare sector, you could see we were down 1.32% today, and we're currently trading right around the positively sloping 20 simple moving average, and we still have the bull trend. So there's still the possibility we're going to bounce off of this support level and go close the gap above and maintain the bull trend. On the energy sector, you can see another very bullish breakout, gapping up and running and closing near the high of the day, with the energy sector closing up over 3.4% and looking very bullish, regaining the full bull trend. So you can clearly see a lot of these sectors are taking over the lead, and that does tell us that this is more than likely just sector rotation, and we're seeing selling in the tech sector and that money is going to other sectors, which overall is still a very bullish development, and it does tell me the S&P 500 is very likely going to make another bullish leg higher. So jumping back over the S&P 500, don't be getting bearish when we're just starting to break out of a bull flag and we're seeing a lot of the strength across the market. That's going to help the stock market breadth as a whole, and we're no longer going to see just the tech sector carrying SPY higher. If you're ignoring that detail, you are going to get destroyed by this market if you're just getting bearish because S&P 500 is going higher. There is plenty of evidence that says we should expect to see higher prices and brand new all-time highs. And if you're trying to short a bull market just because it's going higher, good luck, because you're not going to be doing this for long. So stay objective and follow the price action in the trend. And right now you still need to be bullish because this is still a very strong bull market. Here you can see that Bank Trade Alerts is currently up over 14.6% in the last 3 months. And Bank Trade Alerts is an algorithm-driven trade alert service that sends all of your buy and sell alerts directly via email and text message and only trades the ETF TQQQ. If you're looking for a great way to stay profitable and beat the market this year, look no further than Bank Trade Alerts. This is a great time to be a bank member with the start of the new year, and you can find out all of the details and how to join Bank Trade Alerts by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market, and I bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.